Hey everybody, it's Lee Goldstein, the Trading Director at 10 Minute Trades, and I want to welcome you to my weekly wrap up covering the week of March 14th through the 18th, 2022. So sit back, relax, let me show you what happened this week. Now, the war in Ukraine definitely continues to be creating challenges because what happens is world news overshadows the smaller news reports that we like to trade. So we're seeing some reports not have very much impact. So this will be an effect of the war, and hopefully this war will end soon. Not because we want our trades to work out, but foremost because we want the misery in the world to end. A byproduct of the war ending is the markets will return to more of a state of normalcy where reports will respond more predictably to the news event. So that's what I'll expect to happen. Just a heads up, we are testing some different setups, doing the NQ Open, GC Open at times, and the Oil Open, just because we always like to add new things, keep everything fresh, and learn and teach as we go forward during this time. So our first event of the week was US PPI, the Producer Price Index. We have a range trade that has been working really well on CPI, but it's unfortunate we got stopped on that trade. And looking back, I think we can make some small tweaks to our setup and make it safer for the next month's PPI. So we may have a longer range. We also could slightly change the time, which is the same thing, actually, longer range, change the time. And also maybe a little bit bigger plus and minus above the range ticks. Now, if you're trading with us, you know what I mean. It's sort of like having a bigger bracket. So PPI unfortunately didn't work, but I think we'll have a better outcome next month. Tuesday's API report has definitely been trading better for the past couple of months. Tuesday was a very strange situation. I knew that we got filled before the news came out because we got filled instantly. It was only a couple of seconds after 4:30 p.m. and I was filled. I knew the news wasn't out. That always makes me very uncomfortable because that means there's going to be a move and we're already in the market, so we're not going to be pulled into the market in the direction of the move. So it creates what I always call a coin toss trade, and I don't like those because they're not based on the news event. They're just random. So, of course, I was concerned. We just struggled to grab three ticks and exited the trade with a small profit. And then we talked for a few minutes and watched the market. And still, we really hadn't heard any news results. Just as I was getting ready to close the room, and actually was closing the room, I heard on Financial Juice that the news was released and there was a very possible profitable move had we still been in the market. It was almost 5 minutes after the news was supposed to be released. So just a very strange occurrence though on API. And it's the kind of report that you could wait 5, 6 minutes for the news to come out. So of course that behavior goes into our journal and we'll remember that if it should happen again. So basically a small profit on the API report. Wednesday, we had core retail sales trading at the same time as Canada's CPI. Canada's CPI had a burst, but it's a low slippage instrument, the Canadian dollar, so it never really gives you much of a profit. We got a few ticks on Canada, and we have a great trap trade set up on US retail. And I think, not to make excuses, but I'm making an excuse. I've been a little bit jumpy because trading's been a little bit tough, and I jumped out of the trade with a small profit. And again, the most important element that you can learn and work on is patience, patience, patience. It's the hardest thing that I struggle with as a trader. I need more patience. Just because I'm a professional doesn't mean I can't improve. Had I been more patient, it could have been a very good sized winner instead of a small winner. So again, in the journal, be patient on US retail. We have a great trap trade. It's been working month after month. If you're patient, you will make more money. The last trade of the day was Australia's employment change, and then I'll talk about the FOMC, which came midday on Wednesday, the FOMC statement. Australia's jobs report, it's been waning in its response, its reaction to the news. Last month it was canceled. And it had a very big news offset, meaning there were a lot more jobs created than what were expected. So the offset was large, and it didn't even move the market. We canceled the trade because there was no fill. This month we were going to shrink our trap trade, but I didn't, just thinking the markets have been so volatile. To make a long story short, our trap trade got filled. It's the fourth month in a row that the trap trade has worked. Small profit, but going forward, I think we can see certainly for sure that the Australia jobs report can use a smaller setup for the trap trade, meaning our brackets, our tiers will be shrunk in size so that we get filled sooner and have a better chance of making money on the reversal. Australia jobs report, small profit, trap trade working once again. Now, Wednesday's FOMC, what a scenario we had there, or what an event. Everybody knew what the Fed was going to do. They had telegraphed it. They basically didn't even telegraph it. They told the market, we're going to raise the rates, and we're going to raise it a quarter of a point. Everyone expected that. And even though it was expected, the move in the index when the news was announced was so lightning fast, no one got filled. Maybe one or two people that were trading live got filled. The rest of us just watched as our trade didn't fill. It would have been an incredibly profitable trade in the direction of our setup. It was a very big move. So fast, it just jumped over our orders. And then I did 3 after the news trades. Momentum trades. My first trade was stopped out. My second trade was a profit. My third trade was a profit. So we had a decent profit on the FOMC. Thursday morning, we had a report that I was actually looking forward to, the Bank of England rate statement. It's been trading well. I woke up Thursday morning and I wasn't feeling well. And I actually never cancel trade rooms, hardly ever. I actually canceled the trade room and started later on Wednesday. Of course, it was one of the best moves I've seen in a long time on the Bank of England. That probably would have been the trade maybe of the last 2 weeks. It was an easy winner. So anybody who traded it could have made a nice profit. It was a great move in the short direction. Easy, no pressure. Great DMM, daily trade report setup, was perfect for the Bank of England. After the Bank of England, we had building permits, housing starts, Philly Fed, and there was one other report with it. One other report with it was unemployment, Thursday's unemployment claims. That's a fair amount of news all in one shot. That's a lot of news. So sometimes we'll actually sit out the exact moment of the news and trade an after the news setup. Or we have a very large bracket on the NQ, and we also have a range trade setup we've been testing. Thursday unemployment has not been working very well for about 6 months. It's been inconsistent. That's the problem. We had a new range set up that we could have used this week. We also had a big bracket on the NQ, more than 20 ticks. Nothing worked though. Had it been traded, it would have probably stopped out. I did not trade it. Like I said, I wasn't feeling well Thursday morning, but I did drag myself out of bed and watch it. Our setup did not work on that trade Thursday. And it is an inconsistent time to trade with those Thursday unemployment numbers and news. Sometimes you'll get a good move, reliable in one direction. Other times you'll get a fill and no follow through. And it just didn't work this week. Capacity utilization is a report that does not have a daily report. It's been working so-so. We haven't been really watching it all that much for a long time. I've started watching it again. I would not have traded that live. It's just basically a report that I like to watch. It really didn't have a good impactful move this month. And also it's possible, again, because of the Ukraine war, some of these little bit smaller reports are just not having the impact that we'd like to see. But what we are seeing are good moves out of oil and gas. Wednesday's oil setup is now a larger bracket, and it's a larger target and larger stop. So the oil trade, we've changed our setup, and it is working. It's working. I mean, oil trading Wednesday has been inconsistent, but possibly this new setup is going to work better. We've needed bigger targets, and we've needed a bigger stop. I think that's going to help the setup quite a bit. And we've done a similar thing with natural gas. The stop was big enough on natural gas, it's 15 ticks, but our bracket was very small. We've increased the bracket on natural gas, and we've also, I would increase the targets if you're going to trade natural gas. But natural gas, at the exact moment of the report, needed definitely a bracket increase. We saw that this month. It was this week. It was a tricky trade because depending where you were filled live would determine whether or not it was a profitable trade, because right after the news it pulled back in the opposite direction of the fill. So if you got a good fill, you would survive that pullback. And sometimes when two people trade the same report, they get such varied fills that one person could have a winner and one person could have a loser. So I would say, looking at the analysis this week, 50-50. I would say some people could have won, some people might not have. The after trade, the 3-minute after trade on natural gas, this was the first week in about 2 months that the trade did not work. So, but overall, I would say our new setup on natural gas, I like it. I like a bigger bracket, and I think we can also have bigger targets on natural gas, because when you get a winner, it does move dramatically in your direction. Friday morning, we were testing the oil open and the NQ open. We had a couple of good trades testing the NQ. It was a little bit difficult Friday. There was no real direction at the open on the NQ, and some of our members really like to trade the open on the NQ when they have a definite direction. Also, we showed always that if you overtrade, you're going to get stopped eventually. The key to trading opens, and I believe the key to trading, the less you trade, the more you make. Grab those first couple of trades. If you have a profit, might make sense to walk away, wait for another day. It's so easy to give that money back to the market. The oil open did what it does very often, hit our first target, pulled back, so it would have been a small, just a 3 or 4 tick winner, keeping you alive to trade oil for another day. And then our final report of the week was existing homes. Existing homes is a report that hasn't really been moving that much. It's been about a 50-50, win 50% of the time, lose 50%. If you use the exact DMM setup today, it would have hit that tiny first target for 3 ticks. Maybe it would have made about $30, but I have this theory that a lot of these small reports are going to be really good using trap trade setups. I've started doing the testing. Just think about Australia Jobs. That's a setup that, using the trap trade, has become reliably profitable. The existing home sale would have been a monster trap trade winner. So new homes is coming up this coming week. We're going to apply that concept to that report, and let's see if our theory holds water and the trap trade becomes much more meaningful as we go forward with the world conditions as they are now. So I want to thank everybody for watching. That's my wrap up for this week. I'll see you next week in the trade room. Take care, everyone.